This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia and joining me today are Surbhi and Reema. So it's an all-girls team on Bazaar. And guys, it's Friday, so TGIF, right, as we call it.
That's the best cue, Sonia. That's the one that I'm really focusing on. But you know, otherwise as well, I think we're starting off the Friday with slightly better cues than what we had yesterday. And then we had a good pullback in the market, so I think the bulls will hope for
yesterday, despite weakish global cues, market showed so much resilience, and we did outperform and close with strength of gains of about 0.7% on the benchmark indices.
Absolutely. So that came out of nowhere, right? It was kind of like a googly that came for the markets, but in a good way. So let's get straight to all the cues that we have this morning. As we were telling you, yesterday was a very good day, but I guess it's prudent to be a bit cautious this morning as well as we head into the last trading day of the week for a couple of reasons. Now, there has been a lot of volatility in the last couple of days if you map it, and there is no clarity on whether yesterday was purely short covering or was it some kind of resumption of a trend. Perhaps you'll get to know that over the next couple of days. Now, there are some big cues that this market is watching out for, and I'll track them very closely. One of them is HDFC Bank. So over the next few days, before the earnings print comes through, HDFC Bank generally gives its quarterly update around the 5th, 6th or 7th. So the market will be watching that very closely. The earnings of HDFC Bank comes out on the 16th of Jan. So in a run up to that, if the quarterly update is good, then the market will sort of latch on to that, and that could be the next big positive trigger. We also have earnings, tech earnings coming through. You have TCS, Infosys, and then after that you have Wipro, HCL Tech, all back to back. So next week is going to be crucial in that sense. But there are a couple of positives for our own markets this morning as well. So you could see some follow-on buying maybe. Brent is down to below $78 a barrel, so that's a big positive. FIs have now, it seems like they've come back after their holidays, so there was large buying that we saw in trade yesterday. More on that later. So today, just purely for today, the GIFT Nifty is suggesting that we could maybe build on to those gains after that big pullback that we saw yesterday. But I would still say it is prudent to be a bit cautious because you don't know whether the uptrend has resumed or not. Maybe it could be all over the place also because, you know, we're getting into a weekend, etc.
Oh, absolutely, Sonia. You're right. I mean, we don't know if there's a, clear defined uptrend that started. But what we do know is that the pattern that we saw in December of FII buying, that pattern continues. I mean, there was a bit of a lull, 1 or 2 sessions. It was just around the New Year's. Yesterday, the way the market moved, it seemed very, very clear that this was a lot of institutional buying, maybe foreign institutional buying, because banks were moving higher. Your FMCG, large cap FMCG stocks, they were moving higher. And the likes of Reliance was also supporting the market. So it was very evident that this looks like solid, strong, large cap buying with the money coming in from the FII fraternity. In fact, just to put the numbers up on the board for you, we had about 1,500 crores of inflow coming in from FIIs, offsetting some of the selling that domestic institutions have been doing to the tune of about 1,400 crores. Now, the thing is that the global setup is still confusing. I mean, we're none the wiser, really. Only thing is that Wall Street last night was a little better off. Yields are still elevated. Even yesterday, we had that move around the 4% mark on the US 10-year. But in terms of the stock action, it was, little better. We had some positivity, some green on US screens. But I think the clearer picture on this will only emerge later tonight once we get the US jobs report, the non-farm payrolls data. So we have to watch out for that. The dollar continues to remain elevated. Around 2-week highs when 104.3, 104.4. Those are the levels that the greenback has been quoting at. So where does that leave us? The sense is that we've had a couple of days of volatility, so maybe this market will want to consolidate. But if something can turn that thesis on its head, it is the sheer power of money. So if we get another 1,000, 2,000, 3,000 crores of FII money, then it's a no-brainer where this market is going. But otherwise, consolidation cannot be ruled out. The next level to watch on the Nifty is going to be the previous all-time high. So the zone of 21,800 to about 21,848, thereabouts, that could be the first hurdle rate for the Nifty to be crossed. In terms of sectoral action, I'll watch out for power stocks today because we have the latest CERC tariff recommendations that have come through. Most of the brokerage notes are saying that it's a fairly balanced approach that the regulator is taking. And in fact, there are some additional stops for hydro projects. And we'll discuss that with Vivek as we go along. But the key question for me remains on whether the FII money will keep coming in. And if it comes in, we know what the Bank Nifty will do. And that's what it was doing yesterday. It was providing lots of support for the market. And if that big pillar remains intact, then I think bulls don't have much to worry about.
Absolutely. Let's just quickly round up the global cues then. So yesterday, we had the Dow closing absolutely flat, the S&P 500 slipping about 0.3–0.4%, while the Nasdaq clocked a loss of close to about 0.5%. The Nasdaq has now ended in the red for the 5th consecutive session. Well, the two big news drivers were, one, selling in large cap technology names. You remember the Magnificent Seven, the Mag 7? They're now being called Lag 7. And Apple saw its second downgrade yesterday, the second one in the last 1 week. And the second one was the private jobs data for the month of December, and that was positive. So the US private payrolls data has increased. Americans are hiring. They hired 164,000 people in the month of December, the most since August, and beating forecasts. And that positive jobs data also pushed up the US 10-year yield very close to that 4% mark, 3.98% by close. Today, the focus will be, as Surbi said, on the December non-farm payroll data. The estimate is about 170,000. Economists are saying you want a number which is not too hot, not too cold. You don't want a number which is so robust that it will trigger perhaps less easing, less rate cuts, but you don't want a number too low, which again raises worry about the US economy and the economy slowing down. The other two indicators, the dollar index we spoke about, it's at 102, 102.5. Brent crude is hovering around Brent crude is about $77.5 per barrel. Two more stocks. We spoke about power stocks. Keep your eye on Dabur, because Dabur's business update says there are early signs of revival in consumption, and this was the big lag trade last year. And finally, the business updates from financials continue to point to strong loan growth. So RBL Bank, 20% loan growth. L&T Finance has clocked in a loan growth of 25%.
Okay, and we're just getting in some data on the number of demat accounts that have been opened in the month of December, and it is so strong. It's actually reached a record high in the month of December. Total number of demat accounts totaled almost 42 lakhs compared to just 27.8. I mean, not just 27.8 lakhs, but if you compare to what we saw last year and last month, it is a big surge in the number of demat accounts. So the equity cult continues, and that's because of a variety of reasons that we've been talking about. Also, some updates coming in from Macrotech, so keep an eye out on that. Realty has definitely been the space to be in. But before we start, let me take you through what's lined up in the first half hour of the show. We'll get you updates from the markets across the globe. Foo Kien Yap of Standard Chartered Bank will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV18's list of top 10 stocks for the day. At 8:30, we'll do a fundamental stock analysis. Nishal Maheshwari of Centrum Broking will be with us.
All right, let's kick it off then with the equity call of the morning. Sayan Mukherjee of Nomura says that they are selective and slightly defensive given the run-up in valuations. He says adverse change in the macro narrative can drive a market correction, which will be a buying opportunity. Specifically, he says growth slowdown or US recession can be a clearing event. He says they are overweight financials, particularly banks, healthcare, consumer staples, infrastructure, cement, power, coal and oil and gas, as well as telecom, and are underweight on consumer discretionary, durables and capital goods, defense, metals, internet and IT. Sayan says they are selective on autos.
All right, let's also get you some views on the money markets. We have a call coming in from Lakshmanan B of Federal Bank, who says that slightly hawkish FOMC minutes weighed on the US 10-year yield and provided the much-needed support to the dollar index. This resulted in all Asian currencies trading lower against the dollar. However, the rupee has outperformed its peers, aided by robust inflows. Thus, he expects the rupee to trade in a range of 82.90 to 83.38 in the upcoming trading sessions.
On the bonds, Lakshmanan says government bond yields were little changed and traded in a thin band as traders refrained from placing aggressive bets in absence of both domestic and global cues. Crude oil prices rose due to supply disruption concerns following the Red Sea attacks. US FOMC minutes failed to provide any major triggers to the market. In the coming session, he expects the 10-year benchmark yield to trade in a range of 7.15 to 7.25%.
All right.